and I want to see him for dinner because I'm in Miami, and he's got to get going soon. So Lorenzo, I apologize for taking so much time, man, but I wanted to make sure everybody understood the process here.
All good, guys. No problem. All right, so I guess I put a little presentation together. I don't know if we have to go through all of it, but I feel like it can help guide the conversation too. Just kind of go over a few things.
Well, just skip through the stuff that you think that you may not feel relevant, but go through the presentation, man. Just skip through it if there's
Introduce myself to a little bit for anyone who doesn't know or heard me before, because I know I've done a couple of different things with ARC. So put this together. All right. So I'm Lorenzo. I'm a CPA for the last 11 years. Started in crypto in 2016, and let me go to this. And really just been getting involved in the industry. Been working with ARC for a little bit. We have a lot of the students. You guys do a lot of alternative investing, as you can see just in the last diagram that we were going over. So a typical client for us really isn't someone who goes into Coinbase and just buys and sells Bitcoin or Ethereum all day. This is more for our clients that are into DeFi, do liquidity pools. A lot of these cash flow programs like Crown Global or Novatech and whatnot. And we also do a lot of tax planning, right? So by working with a lot of crypto individuals and doing their books, we end up seeing a little more of their financial picture and how we can help save them with taxes. So I'm going to go over a little bit of stuff today. I feel like I can do this even without the presentation. We can make this a little more interactive with people. So if they have any questions and whatnot, I'm more than happy to answer them as we go through. But one of the points that I want to make before we even get into it is, as you can see with that chart, that was pretty complicated, right? You had a bunch of lines going everywhere in different USDC pools. Doing accounting for that is going to be a nightmare if every single person does this, right? So there's ways, I'm not discouraging it by any means, but what I'm saying is, if you're going to do this, I have this term, being intentional about your wallets. And being intentional about your structure and your wallets is going to make your accounting life so much easier. Because everyone in here does DeFi. You're getting involved into programs and into projects that just isn't your typical transaction. There's a lot of moving around. So one of the things that I do, and I'll go right to this diagram, is before I start with anyone, I do what we call a wallet workflow. And what that is a visual diagram of how your money moves. Exactly what Gwen was doing before. So something like this is an example of a template that I use for a wallet workflow. It starts off with a bank account. Well, let me take a step back before I get even into this. Why am I doing this? The IRS is going to be looking at everyone. I've already actually just recently gotten on an audit. Someone approached me that was audited with crypto, and I'm speaking with the IRS agent, and we're going over what this guy has to do. His situation was really complicated. He had bot trading, so it was like 2 to 3 million transactions over the course of 5 years. And the auditor was actually really cool, where he's calling me. I've spoken to the guy like 5 times now, and we're going, and I'm basically going to diagram this out for him. He's sending me US. We don't have the power to do what the IRS does, and they can go and subpoena these exchanges and get your data if you can't get that data, right? Like for a closed exchange or something you have trouble with, they subpoena them and they get that information. He's sending me all that as well. So if you're in a situation where you can't get the data anymore, trust me, the IRS can do it because they're already doing it. Anyone in the US at least. So what do? We put these things together and we create a map. And what I mean about structure is I like to put holding wallets in place so that you don't have to have all the volume of trades that need to be organized. It becomes so difficult. Let's go to a Coinly. I like to use Coinly for softwares. But you're going to have to go into all these transactions and actually physically do something. It's very manual. So if you're intentional about the activity that happens on your accounts, you make your life a lot easier when it comes to accounting because you see money that goes out, money that comes in, and then you can do the math. It's like I would call it accounting Sudoku. But I kind of went a little off tangent from what I really wanted to start. I really want to start with the basics and then get into a little bit more of like more dive deep into examples. So I'm going to take a step back right now and kind of poll and see where do you guys think that we should go. Do people need to feel like we need to go a little more on the basics, or would people like to know a little bit more about tax strategies? Do people want to know a little bit more about the tech that I use? Like I want to make this a little more, I want to answer your questions versus me just kind of spit off a bunch of things.
I'm curious if you're more getting started, what sorts of data you would advise to keep track of, like from the beginning to make it easiest.
Okay, cool. So step one for everyone in the room is you need good books. So you need to choose an accounting software that you're going to work with. Every person's situation may be different for the right accounting software. Here, we're doing a lot of DeFi. That's why I like Coinly. It interacts with a lot of the wallets and exchanges that you guys are using. So that's really important. Example, like TaxBit, which the IRS uses, doesn't link to a lot of these DeFi platforms, and that's an issue. So that means you're going to work off of CSVs, which you could do, just becomes a little bit difficult. So for everyone in here, if you want a Coinly subscription, Gaven, I know we didn't really talk about this, but I get wholesale pricing on this thing. I'm not trying to make money on anyone. It could be a good perk for just being part of ARC. But I get a $500 multi-year license. What happened?
Throw your link in there, man. And by the way, everybody, so Lorenzo does our taxes, and we have gone through some duds. We have kissed a lot of toads when it comes to crypto taxes. All right. Yeah. So Lorenzo really, when he came with how he does things, oh my gosh, it was next level. And I was like, holy crap. I mean, I didn't realize how much money I made, but I was like, all right, this makes sense, man. This makes sense. And it just, Coinly was the best. And, it's not 100%. That's why Lorenzo and his team are there. But definitely, Lorenzo is the best. Or Lorenzo is the best, and Coinly is the best system to be using for DeFi. 100%.
Why wouldn't I use Coinly? For a few reasons. If you have a lot of transactions, it's not the best software. You have what's a lot of transactions? I'd say over 25,000. So as you can see here, I get them for $69. It's a $500 multi-year plan. I'm not trying to make any money. You see it here. If you want to pay $70, get the wholesale pricing on this. All you need to do, I don't have a link for it. You got to get invited into my dashboard. So I'll show you what you need to do. You just got to get invited to a dashboard. I mean, just like you go into settings, there'll be a thing called team, and you put my email and we'll send some instructions. But you get into this.
Can you share your screen?
I'm not sharing my screen. My bad.
Okay.
I thought I was in here already. So like I was saying, look, there are even the plans here. I'm not doing nonsense here. So this is what I pay as a CPA for the wholesale license. So, what you do is just create a free account. You add me in. I can upgrade your account on your end. So I can do that for all the people here today. But first step for anyone here is you want to start adding in your wallets. Right? As you can see, it's just a MetaMask wallet. Basically, you just come into here, you copy your address, boom, take it. And then you add a wallet, MetaMask, or you can just do ETH or MetaMask, either or, it doesn't matter. And just copy and paste the key. Now, this is what I mean about being intentional with your wallets. If you have a yield farming wallet, I would have a separate account literally for each of these, these different projects. Like just go in here and create an account for each different one. Like this flag one is just some DeFi project. It's a client of ours. It's on the Polygon network, but I created a new wallet just for this one because I got airdrop coins. I just want that to be, I'm thinking ahead of the tax situation, knowing I'm only interacting with that one wallet and doing just that. So if you're doing yield farming, I'd create our own separate account. So you put in your KuCoin or your Coinbase, you just connect or API connect all your wallets or exchanges. Following so far?
Hey, Lorenzo, it's Leone. Quick question with crypto.com. How do we go about getting the CSV file?
So good question. Not every single wallet or exchange is going to be API connected. So what you do here is just you type it in, you see if it's supported, crypto.com. And what's really cool about this is it'll give you information. You click here, exactly how to do it. So it'll tell you that it's offering, how to get the CSV, all that stuff. Like it'll see import the app. You literally, your only options to import the file. Here's instructions. A lot of them even have videos. You literally have a video showing you how to connect it. Now, when I work with a client, I don't want to do this with people because I don't want anyone's passwords. However, we have a process that if you don't know how to do this, we'll walk you through it. But it's not that hard. You just got to have a little bit of patience. If it's taking you more than 20 minutes to do all this stuff, there's a little bit of a problem. It shouldn't take you that long. If you have 1 million exchanges and wallets, yes, it may take longer. But, for the average person, it's not that painful. So once you have all this information in, the next step is that you need to do a reconciliation. We have to clean up the books. It's just like any business. If you give me all your numbers at the end of the year, we have to clean up the books, or we have to clean it up every month. And that's where you go into transactions. I mean, here's perfect examples. A deposit comes in. If this is from MLP, if this is from Crown Global, if this is from the vault, if this is from whatever, this needs to be tagged. It could be a transfer in from another wallet. It can be treated as income. It can be treated as an airdrop. And this needs to be done routinely because it's not going to come in correctly. It can get a little tedious sometimes. And that's why I say be intentional with your wallets. Don't make it a mess. If something's coming in from this address, it's coming in from the managed vault. And soon, Coinly is going to give you the ability to tag that, so you can tag it. So it'll be an automation of anything coming in from the vault will be tagged the vault. So where do you start? Going back to that question. If you're an individual, you have DeFi, this is a great place to start. If you're a corporate client, like Arc, for example, Arc needs to go and use a software like Crypto. Why? Because that tagging, as I mentioned, you can tag royalties from OpenSea. This is more of a corporate software. I can tag out all the different teachers and coaches, and they have to be paid out their salaries and whatnot to their wallets, can be all tagged. See, this is a step above. No one in this room, unless you have a business, would need to use this software because it's pricier, it's more dynamic, it connects to QuickBooks, but this isn't the software for the retail user. Coinly is more of a retail user software. I'll take a step back. Does everyone follow? Any questions?
Hey, Lorenzo, does Coinly work with non-US persons like Australia?
Correct. Coinly's pretty cool. You tell what country you're from, and it'll generate the tax reports for that country.
Nice.
Hey, Lorenzo, I have a question.
So
I know there's a lot of people from Canada as well. So it connects with Canadians as well, right, Lorenzo?
Yeah, I work with a few Canadian clients just on their books, not on the taxes, but um, yeah, there's a tax report section here, and when you sign up, you tell them what country you're in, and then in the report section, it will be.
We can't see. We can't see.
So there's a tax report section here. You can toggle between years. So here's a report section. Before you choose your Coinly, when you create the account, you tell them what country you're in, and it will give you the reports per that country. So like if you go to coinly.io, you can see IRS, Agencia Entrada. These are all Canadian Revenue Agency. It works with many foreign accounts. Any other questions?
Can you show us how to find you again so we can get that deal when you're logged in?
Yeah, here, I'm gonna send put it in the chat here. It's my email address.
Do you have a website?
Yeah, I do. It's lorenzotax.com. So just because of tax season being so busy right now, I do usually like a 15-minute consultation call. Like I can have someone on the team doing it for ARC people. But if you want to book like a 30-minute call or an hour call right now, just during tax season right now, I do paid calls for that. Or if you are interested in signing up as a client, we are taking on clients. It's just more on a limited basis right now, just being in the season. And but I do offer a bunch of different options for people and just to help out. And anyone that's part of ARC, I'm more than happy to lend a hand. But as you could, some of the people that are part of this, it's a lot of work to get some of this done. So I am creating a course as well, which should be done pretty quickly. We can do something more about that then, like maybe even doing something and maybe as like a course for you guys is like showing how accounting is done for certain transactions, right? Because once you know how to work that transaction, it's just rinse and repeat. Understanding the works of it. Like,
And FYI, Lorenzo's a raging degen. For those of you that are looking to become wealth renegades, or I know a lot of you know who are raging degens know he's a raging degen, but I just wanted to throw that out there. He wears that badge on him.
an OG one. I got the starting.
Yeah, he bought the first batch. So
I'm trying to find it. You guys do like Novatech or anything, that kind of stuff too, right?
yeah. We're not pitching it anymore, but we have done it. We have a lot of people still in it.
And Crown Global.
We talked about it one time, and we're not talking about it anymore. But we have a lot of students who are in it that came in not through us.
One of the things I heard someone saying in the beginning was that offshore company.
Yeah.
So just so you guys know, a lot of these other platforms, like for example, Crown's one of them that is requiring you to have an offshore company. So there's certain things in this industry I would tell you to try and stay away from, and that's one thing. Like creating an offshore company is a big compliance deal. It opens you up to a lot of potential penalties if your forms aren't filed correctly, and it's not a cheap thing to do every year. If you go to any big accounting firm or any accounting person that matter and ask them to do these foreign forms, a lot of them don't even know what to do. So I don't recommend it unless it really financially makes sense. I really, really wouldn't. You're opening yourself up to a lot of risk, a lot of different, the IRS is another eye on you in a different way. And it costs a lot of money, like every year to maintain. So just be aware of that. If you ever get involved in something that requires you to do some sort of offshore entity structure, it's definitely a compliance nightmare. Just, long story short there. One of the things also I think we could talk about is maybe some tax planning tips. Is that something that people would want to be interested in hearing about? Or if there's something else?
There are a couple hands raised.
Sure.
Yeah, Igor.
Hey, Lorenzo. Kind of interested with working with you, but going back to that, I've been investing in crypto since 2020 pretty much. So I have transactions where I bought a Bitcoin back at 15K. And so like how do you deal with those clients that do have like really I don't want to say messy, but just like disorganized? I was young, I didn't really think about this planning and stuff like that. How would you deal with a client like myself that does have probably a couple 10,000 transactions or something like that across a bunch of different networks, across a bunch of different exchanges? How do you deal with clients that do have messier books but that kind of need your service to align with the crypto and the DeFi aspect?
I go year by year. Then we have to do something like this. So let's say, for example, you were on Binance International back in the day, now it closed down. We have to get that information. If we can't get that information, I basically make this thing its own entity, and I have the money that came in, the money that went out. Is there any money that's currently still there? If you can answer at least two of those three questions, you could do the algebra. It is what it is sometimes, but it's a little bit more of just piece by piece. It's a cleanup. So you got to go year by year. I mean, in the audit that I'm doing right now, that's what I have to do. It takes a little bit more time. And honestly, you got to just do the best job that you can. I take notes. So if we know that there's something, Igor, that you like got money locked out on, or, maybe there was something like just the main events. A lot of times with crypto, you may have all these different transactions, but honestly, I sort by the highest capital gains, and I'm only worried about stuff like this. 86,000 coming out, 33,000. Like, what are these? I'm not worried about a penny. So a lot of times, 85% of the transactions are not material to you. Like already on page 2, I'm down to 400 in the hundreds now. Like, I'm really worried about this first page here and getting these transactions cleaned up.
And that's how Lorenzo worked it out with us, because it was when we first started, it was a mess. So it took us a while. We got through it, but Lorenzo and his team, and I'm not shilling him, but they are the real deal when it comes to this. I mean, it took a long time, but when we got it done, it was clean as a whistle. All right. We knew exactly where we were at on our crypto tax holdings. I personally knew where I was at. It was like, dude, he really, really untangled the whole thing. And you guys, gals, I'll tell you, I have been teaching people in crypto since 2018, January of 2018. I've had a lot of guys come hit me up. Nobody has done a good a job as Lorenzo. Nobody. And not all of us are going to be able to work with him, unfortunately. But we are working on a class with him so that he can help you set up your taxes, because it is important. It is important, guys.
Listen, I think I appreciate all the kind words, but we definitely need more professionals in the industry. There's just too much work. And, I think that everyone just needs to kind of get a good idea of how to best serve their situation. If you have a lot of complicated like I said, be intentional about the wallets, like know what goes out and what comes back in. And if you can create that barrier, you can make a very complicated situation very simple, fast. And it's all about time. If something takes a really long time, of course it's going to cost more money, because no matter who's doing it, it is what it is. So if you can simplify your situation, you're only doing a better job for yourself. And I really look at percentages. I don't really care about dollar amounts sometimes. Like if someone can save 10%, that's 10%. So if it's $1 million, $100,000, or $10,000, or $1,000, it's still 10%. So what I would say for try and look at also your tax situation like that. Try and find ways to save off of the percentages that you owe. Because the work is the work, and just the numbers get bigger. That's all it is.
Lorenzo, can I ask you a quick question?
Yeah.
My name is Mark. Pardon me. You mentioned earlier that you don't do Canadian taxes, but you do some Canadian. You have Canadian clients that you provide the accounting for as it relates to crypto. Is that accurate?
Correct.
So is that something that, in theory, you could provide that service for someone from any part of the world, as it relates to getting the numbers straight? Are you interested in clients that you do that for, or do you have people in Canada, for example, that do what you do that you would refer us to?
I'm building out the network more. I have a group of guys in Canada that I do talk to that actually do taxes and whatnot. They're more on the attorney side. They have a little bit of a niche, but they've recommended and helped me with any of the Canadian clients that have needed tax work. But from a bookkeeping side, absolutely. A lot of times, you know what I find? That I have this relationship with a lot of people where, they have a CPA. Like, they're in business. They've had the same guy for 20 years or 15 years, and he's great. They love him. It's a family friend, whatever the case is. I'm okay with that relationship if I'm just doing the crypto books, and then I just pass that information on to the CPA. Like, I'm okay with that relationship as well. So it's no different if I did that to someone in Canada or in Europe. Obviously the rules are a little bit different on the application, but books are books.
Thanks.
Hey, I got a quick question. I'm pretty similar to Igor, and my problem is I waited 2 years to file because 21 was good, 22 was bad, and I wasn't sure about like gains and stuff like that. But I'm kind of all over the place, and unfortunately, there's some transactions that I did do that there's no way that I'm going to be able to reconcile, even with some of the CSVs, because they just don't like. I got to put some of that stuff in manually, and that's just I just don't see that happening. And plus, I had. I was one of the guys in Celsius, so I had collateralized Bitcoin and I had a loan taken out, and then I got shut out. So obviously I'm not paying that loan back, but I don't have that Bitcoin. So I don't even know how that works for taxes.
So I don't want to scare you, but I want to tell you, I'm a straight talking New Yorker. This is the worst case scenario for you. You're not going to get the red. You're not going to go to jail. It's not going to be tax fraud. It's a little extreme. But this is more realistic. If they audit you and they do their analysis, you're only going to be able to show them an analysis that's what's your best job. And you're going to have to disagree with them in some shape or form, or agree with them or whatever, negotiate. But if you were supposed to owe money back in 2021 and you didn't pay it, the IRS doesn't care about Celsius, doesn't care about losing money, this, that. Unfortunately, you can negotiate with them, but nothing's guaranteed. But 20% on the penalty of the tax owed would be like your worst damage. But what do you do in this situation? You do the best that you can. It is what it is, man. And you file it accordingly. There's you could be aggressive and not file. Obviously, that's up to you.
Oh, I'm definitely filing. Don't get me wrong. I just said I'm a couple years behind is all I meant, and it's a mess.
Yeah.
I'm definitely filing. Don't get me wrong.
But
I also don't know about the
plan.
I'm sorry.
What's really annoying when you lose money in 21 and then make money in 21 and then lose money in 22 is, I'm going to go to this slide. It should be here somewhere. I think it's
Do we have access to these slides, by the way? Can we download that?
yeah.
Or is that?
I used this slide when we did a presentation in the past. Kind of made it stupid, just to get a little like not stupid, but like playful, just to get a so the difference is there's 3 types of losses. You can't like the pizza doesn't go with the watermelons, the watermelon doesn't go with the chicken. They're all different. They're all their own thing. So when you have capital losses or gains, it's its own bucket. So if you made capital gains in 2021 and you did a good year, whatever, you got to pay your taxes, right? The next year, let's say you lose money. That loss can only go against capital gains. So let's say your regular job, it's not going to be able to use against it. So you're in a crummy situation until then you make money later on, because then you can apply those losses against more gains later on down the road. So let's say you lost money in 22, but you made money in 23. You can utilize those losses from the prior year, but you can't roll them backwards from 22 to 21. So you're in like it's just on a weird spot. The best bet for you is that, let's say 23 goes well and you're able to utilize those losses. What you do, and you file all of them all at once, because you would owe money in 21. You kind of would break even 22 because you can't apply those losses. 23, you would have made all this money, but you apply the losses and you don't pay taxes, and you can use that to pay your old taxes. Like that would be the best case scenario for you, if that makes sense.
Yeah, it does.
So,
What's the liability with the Celsius thing, real quick? Well, I don't have access to those funds, and I didn't pay back that loan. How does that work out?
what's kind of shitty is by law, the IRS doesn't allow you to take that Celsius loss. So what I do, because it's not technically a Ponzi scheme, it hasn't been labeled one. So by law, you're not allowed to write that off. So what I usually do is like, I'll have Celsius, I'll keep a basis, I'll put it on the workflow. And then when the government decides what the heck is going to go on with Celsius, and they'll give some clarification on how to handle it, we have the basis here for you in the event that you need to do it.
Hold on real quick, Lorenzo. I want to understand this a little better. So Celsius basically rugs, and let's say FTX or whatever, you can't write that off as a loss?
No,
Why not?
because it's technically lost or stolen.
And
I write off FTX losses on taxes? Watch. So they actually just did an article on this recently where you can't do it. The IRS actually put out some
because I mean, technically, they invested our money for us, and therefore our money was invested with them, and therefore we have an actual loss because they over leveraged themselves.
So technically, to take a loss, you have to be able to sell it. And since it was stolen, the IRS they just put out something. I can find it and send it out to you, Glenn. Technically, you're not allowed to write it off because you never sold that property. The loophole here, the opportunity that's there, is they allow you to take a loss on a Ponzi scheme. So if they label it a Ponzi scheme, by law, by the IRS, you're allowed to deduct it. I personally feel like the IRS should come out and say something and be very clear about it, because they're treating this like legacy tax law. And this is has an unprecedented amount of fraud has happened in this last year, that they need to do something and make a statement of it.
Very interesting.
I'm not saying that if someone does it, that they won't get caught or whatever, but I can't speak like that. I'm telling you, I want to be very honest with people and let them know what the implications are. And if you do that and you get audited, there's a potential that it'll get kicked back. So what I do, my approach is, let's put it on the wallet workflow. Let's do our taxes right. If you don't need it, then there's no point of taking this loss on the taxes. Because if you're only allowed to deduct $3,000 worth of capital gains losses against active income. So I'll explain that a little further here. And then the balance that's carried forward to future years. You have active income when you work. If you work somewhere, on your W-2, or even if it's your business, you're physically actively working. That's called active income. Then you have investment income. It's called capital gains and losses. It's a different bucket of income. It's passive. You're not working for Bitcoin to go up and down in value. If you're a full-time trader, that's a whole different conversation. But you're not, it's passive, a passive income and loss. So it's called capital gains income or capital gains and losses. Capital gains are when you make money, obviously. You can deduct your losses completely against your gains. So if you made $1 million, but you lost $500,000, you can deduct it. But if you made $100,000 in January to November, and then you lost $400,000 in December, and you're negative 300 at the end of the year, you're only allowed to take 3,000 of that and apply it to active income, to your working income. Then the remainder, that 297K, gets rolled forward for next year, which we were talking with Ryan's situation. It goes to next year. And if next year goes really well and you make $1 million, you can use all of that against the gain. But you can't go in the red.
In active income, if you make $1 million in active income, you can use that for the following year.
Active income and capital gains and capital losses, they're not going to be able to net against each other.
Okay, so it would only be capital gains that you could write it against.
Correct.
Got it.
Correct.
Excellent. I get it.
Hey,
Lorenzo, what is an MLP hyper compound? How's that fall into this?
MLP is an interesting one because I actually like the way MLP is structured, because I'll draw it out.
Or used to be structured. Thanks, Sam.
Why? They're not letting you compound within their system anymore?
No,
they shut it down.
They shut it down.
They shut it down? I haven't been following MLP. I don't have money in it. Let's flip them. Make this smaller too. Okay, so first transaction, MLP gets funded with 50K, right? In MLP, 50K compounds. Nothing ever comes back to MetaMask. You will only see in the blockchain when money gets distributed out. When money comes out, you have taxable events. And this is going to be treated as income coming in. That makes sense?
What about for something like the managed vault, Lorenzo, where you're depositing that into a contract, smart contract, and you haven't taken any, it hasn't come back into your wallet. The money hasn't come back into your wallet.
No taxable events until it comes back into your wallet.
Awesome.
I like that. That's a great model because you can control when the taxable event hits you. Now, something like, for example, Crown automatically every single month, there was a distribution back into MetaMask every month. So every month, even if we sent it right back and hyper compounded it, right? Even if this came right to me and then I put it right back in to compound. Okay. So I brought it in here and it went right back out. But the fact that I took it was an economic event, I took control of that money, it is by law considered a taxable event. If you get audited, the IRS is going to be like, okay, you collected 10 grand, whatever the nut payout is, that's income.
Lorenzo?
Swami,
Yes.
that's a perfect maybe an opportunity for using this diagram, Lorenzo. If in the trader's vault, you guys are requiring the fees to be paid within a specified period of time, the fees based on the gains, correct? So,
Well, we're actually working because there's some brokers that will allow the fees to just be taken out. So we're doing that so that it's just much simpler on you guys and much simpler on us from an accounting standpoint of view. But keep going.
Yeah, like in a prior conversation, there was a question about, if the gain cycles back into your wallet, and then so would that be a Crown Global scenario where you're taking economic custody, and then even if you choose to compound it, it's going back into the trader's vault or whatever. I'm just not sure how that would be structured, but I think that's a pretty important, if the managed vault is going to be simple because we control that taxable event, the timing of that taxable event. It sure would be nice if the trader's vault was if we were able to do that the same way. Otherwise it will potentially become a mess.
Well,
Yeah,
in theory, wouldn't those fees be a write-off because you're paying someone else for the service?
Yes. Well, at least in the US.
Yeah, but I'm just wondering if well, yeah, fair enough. I don't know.
The fees are a write-off. That's services rendered. So if you all are making that money, you're not going to pay taxes on, let's say, if you're in the 50-50 bracket, just to make life easy, you're not going to pay taxes on the whole 100%. You're going to pay us the 50%. You deduct that from your taxes because that's a service rendered. And then you're going to only pay tax on the 50%.
Right, but if it's in and forgive me if I'm getting my words wrong here, but if it's in a broker's account, or are we going to have like a huge number of or whatever, a monthly transaction back into our wallet with the results of into our custody, the results of the trader's vault?
No, I think, Mark, I'm gonna stop right there because that could be a whole other lesson. And actually, let me talk to Lorenzo about that. We may see each other tonight because, like I said, I'm in Miami right now. He's in Miami as well. Let me talk to him about that because that's a whole other discussion. And I do got to get going here in a few minutes. But
Okay.
Violet, but great question, Mark, and I do want to answer it because I need to know for myself. Violet, what's going on?
I was just gonna ask about is it recommended to have to do your trading within an LLC or an S corp? Does that help with taxes?
It can. It definitely can. I mean, any sort of corporate structure also gives you liability, so protection. So if liability protection is an issue for you, I mean, for many people it may not be, but if you have a business, that you could potentially be sued, or you have real estate, and you're this is a lot of money, then it's worth sort of like that, almost like an insurance policy. Then an LLC would be good. To create it just for this,
Yeah.
Would be it depends, like for tax purposes.
Yeah.
I think it depends on the level that you're at, right? It's
Okay.
also, planning can be done at different entity levels. So even if you don't do an LLC for your crypto and you take it on personally, you could do planning on the personal level. So it may not be necessary to make an LLC. S corp, not so much. I don't see that being worth it, because an S corp is really used for like an active business that you want to take payroll out of.
Okay.
So you got to take payroll out of an S corp. For the general structure for like people who are in, I would say like a 500,000 or more kind of, I would say bracket. I think let's say 300 is a good barometer too. Like if you're in that range or above, it's good to have what they call like a C corp and an LLC structure. It's kind of a standard structure for when you start to get where 21% on a tax bracket is low for someone.
Okay.
Because you pay the corporate tax, you can have money sitting in a corporate account, you can use it out of a corporate account, you can pay yourself a W-2 out of it if you need to. I think there's a lot of flexibility on the C corp side, and then an LLC can flow through if you need to start taking things personally. So that like duo combo, I think, is much more realistic than an S corp type of a structure, unless you have a business. Like, you want to take, like I say, like a W-2 out of something. You don't want to have that double taxation of the C corp, but it can be beneficial for certain people, for sure. I think it depends a little bit more of your situation. There's not really a one size fits all. It's more of like a decision tree, I would say, than sort of like a one size fits all explanation of what's best for you.
Cool. All right. Thank you.
Yeah.
Somebody else had a question, I think. Dallas.
Yes, I did. When you say, Lorenzo, a taxable event, percentage-wise, what does that mean? So, for example, how we have that 25% rule when we're doing investments. If we could keep in mind how much we have to keep in mind to pay taxes, so we know that at the tax season we have a certain amount that we have to be saved up. What would that percentage be?
So, if everyone, am I still sharing my screen?
No, you can share it again now.
There we go. So how's trading taxed? I mean, this is a single side right here. It's married filing jointly. This is the new 2022 bracket numbers. I created this. You're not gonna find this like online. This is pretty good, like gauge to see long-term, short-term, and then this is another tax that's added on top. So after 200K, you start getting this extra 3.8%. But if you're gonna have over 300, let's go for a single person. Let's just call it a couple 100,000, make it easy, 180,000. You're talking about 24% or below. So if you're doing under a couple $100,000, you want to be putting away or thinking of like a quarter of that is for tax purposes before any tax planning.
Okay. Thank you.
If you're above that, I would call it more 30%. And then but then, you got to add tax planning onto that, because if you're going to be making that much money, you should be talking to someone about something.
Awesome. Thank you.
Lorenzo, how is staking and liquidity pool? So like the long-term capital gains rate, right? If I have a liquidity pool that I don't touch for 365 days, it's technically like no matter what the impermanent loss is all of that crypto going to be taxed at a long-term capital gain? And then my second question is, if I'm staking something, like, for example, I stake Quenta today for a 70% APR, it's going to be paying me in Quenta, but that Quenta isn't sold to dollars, meaning that it fluctuates, right? Is that taxable? Because I heard one thing that if you don't sell dividends paid to you in crypto to dollars, that might not be a taxable event.
Okay, so first question about the long term. So yeah, if you do a liquidity pool and you hold it for over 365 days, it'll be long-term gain.
Okay.
Unless the liquidity pool is interacting with you all on every single one of its transactions, which generally doesn't, it'll be long term.
Okay.
The other question about I feel like I'm trying to. I might have lost track on the last question there. You said it was about staking, right?
If you
Or
get
staking
paid in
income,
crypto,
staking income, right? So staking income. When you receive staking income, there's a couple ways it can happen. There's a couple ways you could do it, and Coinly's pretty cool with it. You actually have like a button you could switch on this. So there's this court case going on, and there's no determination on it that said staking is not income until sold. I've been taking that approach with some clients because it's in the bill and it hasn't been shot down. So there's actually a toggle here where you can treat rewards as income, or you can treat, airdrops as income, mining as income. And if I turn that on, it will recognize it. If I turn it off, it will give you that money at a zero cost basis. So when you do sell it, you're going to pay 100% capital gain on whatever number you sell it for. And that can be done by a toggle. The software can handle that for you.
okay. So short answer is it's technically not taxed until you sell it to dollars.
So that's how I've been handling it, because it's in the proposal, but it's not in law. So I would keep my eyes out for that. I'd say that's a bit more of an aggressive stance. Like, I take calculated aggressive stances, and that's one of them I'm willing to do because it's in the bill. And until told me otherwise, I'm going to stay with that one, and we'll deal with it if the client's okay with it. If you want to be more conservative, I would say pay the income on it, and then it'll establish a cost basis. And if it goes up or down from there, you'll have a capital gain or loss. That's a more conservative approach.
Gotcha. Cool. Well, I think we're at the top of the hour. So kind of to wrap things up, could you tell people how they can get more connected with your services? And maybe even just because I'm sure this is a question a lot of people have in their heads, is like, what is even the minimum cost of working with you, of different packages that you might have going on, just so that we're all on the same page and we don't waste each other's time?
Oh, yeah, for sure. So we generally do like our books minimum is usually 2,500 to anywhere, I would say it can range from 2,500 to 10,000 on a calculation, depending on how much time it takes and how long it is. Generally for the DeFi, I usually say budget 5K for the year. Like if it's something that's really complicated, like all the Crown guys, they have a minimum of 5K for bookkeeping for their jobs. Then, if you wanted to do just, even calls, I do like a half hour call for $275. I do an hour call as well. If you're doing tax planning, we usually do a $10,000 retainer for that. And then we have, if you need estate planning where we have to bring the attorneys involved, I have like a program for that as well that includes the attorney's time. So it's all split up. And then we have just really like a la carte options if something that doesn't fit into those buckets. I mean, like I said, we don't have a million clients, so we work with people, but I usually tell people like we usually have 3 different retainer levels, and it's usually like 5 or 10. And then like we have a 25K option for like with the attorneys and whatnot. But what I like to do is do things piecemeal, right? We usually start somewhere and go from that point, because if someone's going to pay me more money, it's because they made it and we're saved them something. If they're going to pay me less, it's because we did less work. Like I usually like to have first year minimums with people, and then going forward to the next year, we see how everything went, and we can adjust up or down depending on how things went. But if you wanted to call, we do a free 15-minute discovery call with someone on the team. I do, like I said, 30-minute, 60-minute and tax planning calls. if you wanted just to schedule something with me directly. And then, for taxes, it all depends on your tax situation. Some people have more simple returns. Some people have really complicated returns. So if someone has 6 different entities that we need to file for, it's not going to be the same price as obviously one person that has just their 1040. But I would say to start, it can be as low as 2,500. It could be, as much as 25,000.
Cool. And correct me if I'm wrong, but I think in the and Swami, you can kind of maybe speak on this a little bit. If you're a Cosmos student, they're supposed to get an hour with you as part of that curriculum, right?
Yeah, we did something along the lines of that. So if someone's at Cosmos, I'm more than happy to have a little consultation with them. That's fine.
Cool. And also, just because this question was in the chat, Ryan was asking, could you include the slide deck, since you couldn't go through everything today, that we could just check out, take some notes on, and learn from that? Would you be willing to share that, or is that a no-go?
No, that's fine. The PDF, easier.
Thank you so much, Lorenzo.
Yeah.
We appreciate you and your time.
All good, man. All good, guys. It was good. If anyone has any other questions, I'm more than happy to answer them now.
A real quick question regarding Novatech, and like when you showed the taxable event coming out of MLP, Novatech charges $25 a month or a month for their being in their world. And then when you take MLP, when you transfer money, you're taking your taxable income gain, all the fees that, what happens with the fees that when you take $100 out, but you only get 95, or you take $1,000 out and you only get 950?
What I usually do with this is we have a template of money that went in, money that came out. So I like to just have my initial funding total and then how much has been taken out. And, there's a few ways that you could play the taxes on that. So I like to at least cover my basis that's within my initial investment before I start paying taxes. So it's a little bit manual.
Sure.
It's definitely a more manual approach.
Thank you.
Hence why, for example, like the Crown one, it's usually a little bit more because it's just is more manual. And it's always good to work ahead, not behind. So I always tell people, get a hold of whatever your situation is right now and then work ahead of it. Don't work behind it. It's a CFO approach versus a CPA approach. CPAs, give me all your stuff from last year. Let's take a look at it. CFO approach is, okay, this is what happened last year. How can we make a plan going forward? I think it's a good mindset to develop.
Awesome. Can you put that PDF in the chat?
Oh, you could do it that way?
Yeah, you can put the PDF in the chat and we'll be able to download it.
We'll get it with the recording too, Lorenzo. If you just want to share it with me or Gavan, we'll make sure we get it posted with the recording.
Yeah, I just emailed it to Gavan. Here, I'll give it to you too. It's Casey,
Sure.
right? That's it.
Yep.
Presentation.
All right, everybody, I got to get going, but I assigned Casey as the admin if you guys want to stay on, but I got to jam. So
Awesome.
Great stuff. Thank you, Lorenzo.
Yeah, my pleasure, guys.
I'll see you guys.
All right.
Great start of the school.
Thank
Take
you.
care, everyone. Have a good rest of your
Everyone.
weekend.
Thanks, brother.
Bye, man.
All right, everyone. Hope
Thanks.
you all have a wonderful Saturday. Thank you for sticking around for this long class we had. Hope you got some value out of that. I know I always get a ton of value every time I talk with Lorenzo. He presented at our mastermind in Costa Rica, and he's always full of nuggets of wisdom and trying to save us money on our taxes. So can't thank him enough. But yeah, hope everybody has an awesome Saturday, and I will see you next week.
Thank you so much, guys.
Stogie, I miss you.
I miss you guys too.
We'll catch up soon.
You got it, guys. Thanks. Good to be here.
All right, everyone. Happy Saturday. Peace.